Tesla is making its debut in the primary corporate bond market. It's planning to sell $1.5 billion of bonds to support spending on its new Model 3 electric car. The sale is also going to help its balance sheet. Joining us now is Nabila Ahmed, Bloomberg News senior reporter for corporate finance, and the person I go to whenever I have a super dorky credit question. And she's always so nice to me. Okay, so first of all, what's the demand for this bond so far?
Okay, so the demand, within a few hours, they'd already sold about a third of it. As of last night, we were hearing that they're already oversubscribed by about 3 times, 2.5 to 3 times. I mean, look, everyone...
And what kind of yield are we talking? We don't know yet. It hasn't priced, but the rumors are like under 5%, right?
Absolutely. So they went to market initially saying, 5.25, around that. However, the interest is such that they'll probably be able to do it just under 5, which is amazing. This is a company that's 6 levels below investment grade.
And it just spent $1 billion in its last quarter, by the way.
$1.2 billion to be precise. But so explain this to me, why this is not deeply disturbing about more broadly what's going on in the country. Because as we said, they've never made $1 in profit, right? They're burning through cash, most recently $1.2 billion. They only have enough cash as it is to last another 3 quarters or so. And people are willing to take under 5% interest on this risk? Why does that make sense? Is that saying something more fundamental about the credit markets?
Absolutely. Look, to you and I, it doesn't make sense, but here are some people sitting there with so much cash, and they need to put it to work. So all the investors we've been speaking to are saying, you're exactly right, we shouldn't be accepting this yield for this company. However, everyone's going to jump in and we don't want to miss out. There's this massive FOMO happening in the market as well at the moment, that people don't want to miss out on the new issues. And you know that they'll price it such that they'll probably, they can price it under 5, they'll probably do it around 5 or just above so that you get to pop on day 1. And if you bought it, you feel good about yourselves.
Right, exactly. But let's talk about the covenants for a second. What kind of covenants are attached to this bond? Or lack of?
So interestingly, the covenants protect Tesla in a way that an investment grade company would be protected. However, for investors, it's worse than a typical junk bond company. So again, it's a borrower's market. So one of the covenants is about carving out their massive, their crown jewel, which is their big gigafactory. It's the biggest battery factory in the world. And what they're going to do is carve that out so that they can borrow more money against it, using that as collateral. What that means is that the bondholders who are going to buy now can be pushed down the rankings for something that, if something bad happens later on, because they can layer on more debt on top of that.
So now I'm even more baffled.
Normally
when you go into the market, a corporation gets certain constraints on what they can do, because there are certain ratios you have to maintain on your balance sheet and your income statement. So what you're saying is there are essentially no restrictions on what Elon Musk can do going forward in these covenants?
There are no restrictions, but we've been seeing covenant light for ages now in the market, and there are a couple of covenants here that people are particularly worried about.